my name is Chandni Patel. I am part of the Auren Realty group. Today I'm here with Dave. He is part of Caliber Home Loans, and today we're going to talk about FHA loan as well as down payment assistance program and conventional loans. So can you elaborate more on what's a conventional and what's FHA loan?
So conventional is anything that's insured or run through Fannie Mae or Freddie Mac. FHA is a government insured loan, insured by HUD. It's typically allows for higher debt to income ratios, lower credit qualifying. We'll go down to a 580 on FHA. Anything under that requires a larger down payment, and it has to receive and approve, eligible through the automated underwriting system. But FHA allows for, I think, more people to get into a home. Now, the loan amounts are less on FHA than conventional. Conventional will go up to 548, 250. FHA is still in the under 400.
I know there is a program for Texas Heroes, which are for first responders, military, as well as medical professionals.
Right.
Are there programs that are for just ordinary Texasians who have low income?
Yes, the TSHAC, the down payment assistance programs, there used to be, and I'm not sure what they do because we get different memos from them all the time, but there's a program called Home Sweet Texas that is for anyone. The Homes for Heroes is for, like you were talking about, first responders, our frontline workers, but that has been grouped into one bubble now. So they all have access to the same programs. The rates are the same. The down payment assistance are the same. The guidelines are the same. So the names and the marketing is still out there, but it's basically, I just refer to it as DPA, down payment assistance. And then whether you're a veteran, whether you're a nurse, a teacher, I mean, I do a lot of those, but you don't have to be that. And you don't have to be a first-time home buyer to qualify for those programs.
So what can you tell us about down payment assistance program?
It's a state agency program that we have access to that basically helps get buyers into their homes with some down payment and or closing cost assistance up to 5% of the loan amount on most programs. There's a conventional program that only goes up to 3%, but it also allows someone that makes $124,000 a year qualify when that's typically not the case.
So what are some cons and pros about down payment assistance program?
Well, obviously the pros are you're getting free money. On a $300,000 loan amount, you're getting $15,000 to use for down payment and closing costs. Now, FHA requires a 3.5% down payment. If you're a first-time home buyer, you can get into conventional at 3% down, assuming it'll go through the system that way. So right there, you're getting a large majority of your down payment covered by the assistance, and what's left over goes toward closing costs. So the difference between conventional and FHA down payment or the programs itself without the down payment is just the down payment itself, 3 versus 3.5% or 5% if you're not a first-time home buyer.
What other loan programs do you guys have?
Well, as a national lender, I think we're number 2 or 3 in the non-bank loan purchases closed last year. We were just named top 3 lender for USDA in the country, Caliber. For our VA program, we're on the top 3 of every VA referral out there. We've got a unit that is specifically, it's a military unit, it's run by veterans. And our veterans, with every loan that they close, they get a thank you chip in the mail later, thanking them for their service from Caliber. USDA is a really cool program. Like VA, it's a zero down. The guidelines are a little more rigid with income, that kind of stuff, and with the areas. I mean, you're not doing a USDA inside DFW, and there are still some areas outside the Metroplex that qualify.
Yeah.
But it's a map that's set out by the USDA and what properties qualify for that kind of financing.
Okay. So, what are other costs that the buyer should be aware of other than the down payment cost?
Okay, that's a good question. So basically, with us, with Caliber, I know, there's other lenders, there's brokers. I mean, there's 1,000 different players out there, and every company has different guidelines on what they require. With us, the only upfront fee that we have is an appraisal fee.
Okay.
And depending on conventional, jumbo, FHA, they're different. They range between 5 and 600. 650 if it's 60 miles out, or if it's a 8,000 square foot house, it's probably going to be 750. It's up to the discretion of the appraiser. But with all that said, a lot of times I see people getting hung up like, well, I've got $10,000 to put down. That's 3.5%, so I should be good. There are closing costs involved in every transaction. And you've got your lender fees, you've got your title company fees, you've got your prepaid, your escrows, which is your insurance, and your taxes. Now, you lump all that together,
Right.
you subtract out your down payment and your earnest money, and that's what's left over that you have to bring to closing. So I think a lot of people, at least especially for some home buyers, they get confused. It's just hard to keep up with all the numbers sometimes.
Right.
So if you're like thinking I've got this much to put down, I'm good. Well, there's more than just a down payment, and that can run 2% of the loan amount. I mean, if you're on a $200,000 deal, if you're putting $6,000 down, 3% conventional, with insurance, taxes, because you're probably going to have another $3,000, maybe $4,000 in closing costs, depending on, again, taxes, insurance. I mean, our fees don't change with the loan amount.
Right.
Like a $80,000 loan is going to have the same closing costs with us, with our lender fees, than a $500,000 loan. But when you have a range like that, costs that are going to change are taxes, insurance, title, policy, all that stuff.
Awesome. And if you were to give one tip to our first-time home buyers, what would that be?
Get pre-approved up front. Number one step. Everything else is a waste of time.
Awesome. Thanks for your time.
You're welcome.